understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
And we are back with another episode of the Tech Behind FinTech. Happy Friday. Today, I'm really excited. We're going to be talking about unlocking unstructured data, transforming FinTech with AI. I'm joined by my guest, Aditi Subbarao. How are you today?
Hi, Namdi. I'm doing great. How are you?
I'm doing wonderful. Aditi is joining us from Instabase, and we're gonna really get into this whole unstructured data conversation, which I'm excited about. We had a previous interview. It was a mini interview on our TBF One to Go series at Money 2020. So after the interview, I said we have to sit down for a longer conversation, and today is the longer conversation. Before we jump into it, we're gonna do some housekeeping. We are streaming live from Facebook, LinkedIn, YouTube, and also we have a separate stream going from Instagram. As always, if you want to drop a question or comment, please feel free to do so, and we'll answer it on the spot or simply say, I don't know, and get back to you later. But most likely we will answer it. So you could drop it in the comments and you'll be part of the show. For those on Instagram, please go to techbehindfintech.com and your comments will be posted. Now, without further ado, let me introduce my guest officially, read her bio, and jump into today's episode. So once again, today's episode, Unlocking Unstructured Data, Transforming FinTech with AI. Aditi Subbarao is the Global Financial Services Lead and Strategic Partnerships Lead at Instabase, a generative AI platform that helps organizations unlock the power of unstructured data. With 15 years of diverse experience spanning banking and technology, Aditi has worked across industries, continents, client types, and business lines. In her current role, she spearheads Instabase's FS vertical, financial services vertical, helping banking and financial services organizations create value from Gen AI. Aditi also leads Instabase's strategic partnerships function, building out a collaborative ecosystem to help the industry achieve the benefits of large-scale, end-to-end generative AI solutions. Aditi, welcome to the Tech Behind FinTech. We're happy to have you, and we're excited to jump into today's conversation.
That was a very kind introduction, Namdi. Thank you. And like you said, I'm really excited to be here. It was great to chat to you at Money 2020, and I'm looking forward to getting into detail on a topic that I feel very strongly about. So thank you for having me.
All right, excellent. Aditi's joining us over from London. There might be a slight delay. I hear it, but bear with us, and we'll get through this and really have an exciting conversation. So, before we kick anything off, the main question, the elephant in the room, what is unstructured data and what is structured data? Let's set that platform so the audience can understand what we're dealing with.
Absolutely. So, for the purposes of today's conversation, unstructured data is any kind of information that does not follow a predefined or standardized format. This contrasts to structured data, which you can think of as easily categorizable into rows and columns, like you would have in a database, for example. Unstructured data, think of text in emails or long legal contracts, or even images and pictures and videos and audio clippings. All of that data which you cannot neatly categorize or format in a defined way is unstructured data. Now, what I would love for all of you to have as an image in your mind for the rest of this conversation, or indeed anytime you hear of unstructured data, is think of the stylized treasure chest that you have in children's storybooks about pirates. You might have seen these. So you have this little treasure chest, and all the pirates go looking for it in these storybooks. Unstructured data is like that treasure chest. You have to find it all over the place. You have to dig deep to get to it. And then when you open it, out spill all of this mixed up jumble of like gold coins and jewelry and gemstones and all sorts of random stuff. Unstructured data is like that. It's hard to get to, it's valuable. Children's storybooks end there once the pirates have found the treasure chest. But for organizations, unless you have converted that value into money by monetizing it, that unstructured data is useless. And hopefully today we'll be able to figure out how to convert all of these treasure chests that enterprises are literally sitting on into tangible value.
Yeah, that's interesting. Let's get into that, because you gave some examples of unstructured data, and I like the treasure chest example, right? Like my office right now is a bit of a mess, so I'm going to say the stuff in my office is unstructured data. It's crazy in here, and so I have to kind of get that organized. But in general, right, I like how you broke data into different, just different aspects of data. So we have text, you said email. You also said video. So when you say video is data, are you saying that once the video is transformed to text, or the actual video itself without the transcription?
Yeah. So text itself is a manifestation of data in the sense of information in its purest form. So when you think of converting this video that we're having in digital format, at the end of the day, it is still a collection of ones and zeros. It's still bits and bytes. And perhaps in the future, it's still like quantum state rather than just 1 and 0. But ultimately, all expressions of information are data. So it could be text, it could be video, it could be audio. Now, when we think of it in the context of enterprises and especially fintech, most unstructured data still tends to be in text and document format. Like that's what organizations are worried about. We're still to get into a realm where we're processing or taking decisions in the financial services space from video data. It will happen in some cases, but in the financial services space, in the fintech space, it's still predominantly document related data.
And I like that in breaking it down to the simplest format, in which you're saying, okay, all expressions of information is data. And that's like an excellent way to look at it. When I think one of the things when you're in technology, we're just so used to saying data, we're so used to just looking at it from just a different aspect. I have to get this data, I have to move it here. I have to, in my case, because I'm in security, I have to secure this data. But when you take it from its simplest form, like you just did, I said, look, all expressions of information is data. It gives the audience a different way to think about it. I love that. So if we look at all expressions of information as being data, you have sometimes that expression of information can be structured, like you said. It's in rows and columns, neatly organized. We have a way to get it as in a database, or even an Excel spreadsheet, which is another form of a database, right? Now we have the unstructured part that you said, in which it's all over the place. It's not neatly organized, right? It's like the treasure chest example. It's value in there, right? But you really have to dig it out and sort it out and take things out and put it on your floor and say, okay, I want that over there, want this over there, right? So we think about it in that analogy, but now we bring it over to the fintech side, in which you said, okay, listen, we're dealing most with text and documentation. So, you can imagine just millions and millions and millions of receipts, paper, random things here, right? That we have to go through. And that's totally unstructured. So now it's like, okay, how does that work in terms of taking that unstructured data and getting the value from it?
Absolutely. And exactly like you said, in the financial services and fintech space, this is by far one of the biggest challenges that companies are facing at the moment. So there are a number of reports and research which estimates that over 80% of the data that comes into these organizations is unstructured data. Can you imagine? Like 80% of what they're dealing with is unstructured. That is only going to keep increasing in the future. Sorry, you were saying something.
This is huge, right? Because like that's a big picture to paint, and I don't want to rush through that, right? What you're saying now, based on the research, 80% of the data that these organizations have is unstructured,
Yes.
which is huge because now you can look at it from a perspective of the manual actions this stuff takes, because we're living in a world in which we're only producing more data, right?
Exactly.
We're not going backwards. We're at a stage now. It's
Yeah.
more data, more information. It's more data coming from different devices, coming from different. Say it's just a lot more data, and like I see, so now you're saying if 80% of that, that's a huge problem. Because you still want to extract, like you said with the treasure test, how do you extract value of it? How do you make sense without spending countless hours doing this stuff?
That's exactly right. And how you've translated it into okay, if there's that much unstructured data, that means there's that much manual effort. And that is so true. So historically, what had been happening is the only way of dealing with that data was by people. The technology that we had, or the computers that we had at that point, were just completely incapable of dealing with the sheer complexity and variability of that unstructured data. So fintechs had one of two options. Either you bring in people to do that job, or you just ignore the data. Now think about it, Namdi. Like 5 years ago, how many people were actually talking about personalized investment offerings? Or how many people were talking about proactive insurance protection? Almost none. Because we didn't have that expectation as consumers. Organizations didn't have the capability of doing that, and therefore that data was just ignored and saying, I don't have the capacity of dealing with that data. I'm going to leave it for now. And here is my off the shelf menu of the 3 mortgage products I will offer, take it or leave it. Whereas now, because we have the capability of dealing with that data through technology, all of these different offerings are coming up across fintech and financial services. And in a way, what has happened is, like you said, that elephant in the room, that huge problem that nobody had any idea of how to tackle, we have slowly started chipping away at it, saying, oh, previously I could maybe deal with one small piece of it. Now I'm going to look at that elephant in its entirety and figure out how to solve that problem for my specific customer set, for my specific strategic objectives, and so on. So I think we are very much sitting at, it's like the gates of the fortress are being thrown open in terms of the unstructured data problem. And hopefully over time, all organizations will figure out how to deal with it and, again, like, create value from it.
It's something that you said that I find very interesting, in which if you look at 5, 10 years ago, 15, 20 years ago, the problem we see today with unstructured data didn't necessarily, it always existed. It's not like this is a new problem per se, but 2 ways to deal with it, right? You either bring on more people to manually deal with it, or you just ignore it, right? And I never thought about it that way until you just brought it up, because in ignoring it, you have these cookie cutter products that you're selling. So, it's less customized. It's like one size fits all. Here are the different products. So we're breaking our customer base up into certain segments, into certain groups, and we're going to create a product for each group. And if it works, it works. If it doesn't, it doesn't. Okay, we might have some service at the end, and they'll help us enhance our products in the future, but we're not leveraging that data, the value that you mentioned that's in the treasure chest. So it's interesting to look at it that way, because you're right? We started looking at 5 years ago. It's 2025 right now. So we're in the midst of like COVID 5 years ago. Slowly as things start to creep in, like the years, you have started seeing more of these custom personalized solutions to fit into your exact situation. It's not ubiquitous per se, but you start seeing signs of it now. You start seeing, fintechs partnering with larger financial institutions to produce, all right, leveraging obviously the thing everybody's talking about, AI, that things like next best product, things like, okay, we're gonna pull through all this data to start really analyzing it. In the ignore phase, right? When you're ignoring this data, what do you think is happening now? Are they going back to all of the past records now and then reanalyzing it, trying to find something? Is that what you see?
There's actually two implications of stopping to ignore data. One of them, and we'll come to that as a second step, is what they are now starting to do better. But I think a far more serious problem that inability to access that data had created was that there were entire categories of customers or demographics that were just being completely ignored as customers of those organizations. So anybody who did not have a digital identity in the sense of, say, a passport or a credit history, or like any kind of profile that a financial institution could then risk label and do business on the basis of, you would not benefit from any of those products. You would not be given insurance. You would not qualify for a credit card just because there was no ability to manage the unstructured data that could then be used to create a credit report or a risk profile or something like that. And that meant that there were entire sets of the population that were unbanked or that were not being given the kind of services they can. What this led to was that small businesses were not being lent to, individuals were not qualifying for credit. On the flip side, banks were missing out on a customer base or an addressable market, which was actually much larger than what they were addressing at that point of time. So I think that is a much bigger and more serious consideration, which now AI is helping us tackle through the ability to understand that unstructured data, through the ability to incorporate alternative sources of information into banking decision making. So that's the first piece. And the second piece is what you were saying. Like, are they starting to do better? Are they looking across historical records and data? And the answer to that is yes. So the two things that have started happening is that banks are now going across legacy data to see what they can bring into their decision making, into their pricing models, into their understanding of their business and their customers. So I have personally worked on projects where you have people bringing up printed hard copies of old term sheets and contracts in iron mountain cardboard boxes from vaults, and finally digitizing them and turning them into systems, which then into data, which then gets populated in systems. We have had several projects where banks have gone through legacy records of thousands and thousands of clients across millions and millions of documents, and then migrated them onto client lifecycle management platforms and so on. So that has definitely started happening. And the second piece that has started happening is that banks are a lot more likely to think outside of silos in solving problems. So another trend that has kicked off is, historically, it was all about optimizing a certain process or making a particular system more efficient. That gradually changed into looking at the client journey front to back. So at what points of the organization does a client or a customer interact with my organization? And how can I make those interactions better throughout that journey? And where we are now seeing that going is, rather than just thinking of the client journey, it has now become the data journey. So where does the information flow in all of these interactions? Whether I'm onboarding the customer, whether I'm giving them a loan, whether I'm setting up a deposit, whether I'm making an investment, whether I'm making a payment, whether I might even be offboarding the client, or there's a bereavement process that I'm managing. How do I go through that entire data journey to make sure that all the data that I need, I can use in one go, and then whatever actions or decisions are taken on the entirety of that data as opposed to individual systems. So I think these two changes, which are both very promising for customers, have started happening across the fintech space.
It's a lot to unpack there. I want to start with number one, because that's addressing a whole demographic of the unbanked that you mentioned, and I want to dive into that and to further. You touched on it, which I had previous interviews in which some of the fintechs use they partner with banks to find alternative means, and it was one company in South Africa that they found alternative means to help people establish credit through grocery shopping, right? So I found that interesting. I want to kind of unpack this revolution in the unstructured data technology and how it's helping the unbanked. Let's get into some examples there, because I'm really curious in terms of how that works from your standpoint.
Absolutely. So let's bring that down to access to capital. And I think that is by far one of the biggest concerns in the space of increasing banking access. It's not so much savings accounts, it's not so much deposits, it's about access to capital so that you can kickstart productivity, so that you can set up your own business, so that you can actually do something to help you grow your own wealth and climb up the financial ladder and get more financially equipped and capable. So I think access to credit is like one big consideration in the financial inclusion conversation. Now, within that, exactly like you said, the traditional loan origination or is
Having a connection issue. Having a connection issue. Not sure. I just want to.
Okay. Sorry. We keep.
Yeah. Okay. So we've had a little bit of a connection issue, but you were saying here's where it kind of lost me. You said that let's talk about the access to capital and credit in terms of building wealth and so forth. We're good now. Your screen is moving. Can you continue from there, please?
Let's go from there. So we've established that access to credit is one of the biggest considerations in promoting financial inclusion. Now, amongst that, when you think of a standard loan origination or underwriting process, the two key elements of that are verifying identity and verifying credit, i.e., is the borrower who they say they are? And B, can I lend them my money? Am I sure that they will pay me back? The first piece is tricky when you're thinking of borrowers who might not have all the standard established documents to prove identity. There are millions of people in the world who don't have passports. There are millions of people in the world who don't have an ID card. There are people who don't have birth certificates. How do you go about establishing their identity? And therefore, if you have the capability of pulling data like, oh, here is my school leaving certificate from this little village in Africa, or here is where I have a letter from the doctor of the local hospital which says that I was born there, and then even if it does not have a stamp on it, if you have the capability of going through all of that data and mapping those patterns out to established identity, that helps that identity verification process. And now AI can handle all of those documents. It can handle
we're having a slight connection issue. Okay, so listen, Aditi we just lost her for a second. I'm sure she's gonna come right back. All right, cool. All right, it's a lot. It's clearer now. Are you with me? Aditi, are you with me?
I can hear you, yes. Can you hear me?
I can hear you. Your screen is just frozen, but I can hear you. Let me know. Let me just let me ask you. I'm just gonna. Yeah, I can hear you. It's just frozen. Do you wanna you wanna reboot and come back?
Let me try doing that. Give me 2 seconds. Sorry about this.
No worries. All right, guys, listen. This is a really interesting conversation so far. So, while Aditi reboots and comes back, we're talking about unstructured data and versus structured data. One of the things that I found really interesting, in before we dive into the technology of it, is how leveraging unstructured data can help the unbanked, or how has it been helping the unbanked? You know, and she was touching base on that. I mean, when you think about it, here in the States, the United States, we take for granted the concept of IDs, and I mean, most people have a driver's license or passport; they'll figure that out. Go in the bank. But what if you're looking at sectors or places that don't have access to having an ID or so forth? How do you verify this person? From a bank's perspective, obviously, if they can't prove who you are, you can't really establish an account. And what we're embarking on here, in terms of the unstructured data conversation, is saying, with various ways of leveraging unstructured data, the previous people who were unbanked can now get access to banks because leverage we can leverage the unstructured data. Okay, Aditi's back. Let's put it back on the screen. That's clearer. Can you hear me?
I can hear you. Can you hear me?
I can hear you. So while you were gone, I was given a recap to the audience about the unstructured data conversation, how it's impacting the unbanked. Basically saying, if you don't have an ID, right, we take for granted here in the States or different Western nations, you're going to get an ID, whether it's your driver's license, passport. But in certain regions around the world, if you don't have one and the bank cannot prove who you are, obviously, so they can't prove who you are, how they're going to get their funds, then you become part of that unbanked. And, when you're part of that category of unbanked, one of the key ways to build wealth is to leverage capital. Whether you're getting into real estate, it's different. You leverage it. Whether you have a business, you take out a loan to get something that you don't necessarily can't get with the cash you have in hand. You leverage it, things work out, you make a spread. So if you don't have access to that, then that kind of diminishes that avenue of wealth. So I was giving the audience a recap. I'll let you go, in terms of what you're talking about and how valuable now leveraging unstructured data in terms of the technology can help that segment. So give the floor back to you.
Thank you. And hopefully I'll be able to see you on this time, fingers crossed.
Hopefully.
So like we said, those ways of establishing identity from different sources of data, AI can now allow us to do. The second piece, which is equally important, is the establishing of creditworthiness. And what I mean by that is, traditionally, when you have a large bank which is issuing a loan, that will use, say, a bank statement or a pay slip or any kind of financial statement data to be able to extract it. Now, AI can help you extract that data automatically across infinite variations of pay slips. Like the NHS, for example, in the UK is notorious for having really variable, really complicated ways of paying people and pay slips and things like that. But AI can then extract data across all of these different types of information automatically so that you can take the decision of whether or not a person is earning enough to be able to pay the loan back. But this is for people who have pay slips. This is for people who have employers on a regular basis. People who don't, what AI can now help you do is exactly like the examples you were giving, Namdi, which is that you can use history of previous rent payments. You can use history of where you've been investing in a particular business. You can use history from where somebody has been giving you money to be able to teach them, or to be able to take their cows grazing, or to be able to walk their dogs, or whatever it is that you are generating income from. All of these different things, or a gift letter scribbled by like a really rich grandpa you might have somewhere else, like all of those sources of information can now be taken in to create a credit history for people who do not have either traditional employment or sources of income that can neatly be translated into payslips and bank statements and bank accounts. And I think that is one of the biggest superpowers of AI, because now we are not looking for traditional evidence of creditworthiness. We can expand that lens a lot more. And therefore, people who are looking to start micro enterprises, people who are looking to start small household businesses that will effectively then empower their own family to do better in life, all of that is now accessible from a financial perspective, and also for organizations to lend to.
No, I mean, and it's good. And I want the audience to understand that this capability wasn't possible, well, 10 years ago. It wasn't as in the forefront. So, or 20 years ago. So what will happen in those instances, those people and that information was in like what Aditi talked about earlier, right? Two categories. You either ignore it or you bring on manpower to address it. If you don't have the resources to hire that much manpower, you have to kind of be a little bit stingy with your time and say, you know what, we can't use them for this portion of people. We're going to focus on the ones with credit and so forth. So that whole segment was ignored, and I think that's a really valuable point to bring up in terms of the value for the unstructured data, not just for the bank, but for the customers that were previously ignored in that segment. You talked about now number two, which I find very interesting as well, in which banks now are bringing in the legacy documents from like Iron Mountain and all these things that were previously ignored, maybe shredded. Well, obviously not shredded because they had it in some back room somewhere. They have to keep it for X amount of years, but now they're digitizing that, because that's still, even though we go from it being in a paper form to now it being digitized, it's still unstructured data. It's just unstructured digitized data versus unstructured paperweight, right? So can you explain that process now, and how are they now gaining value from that information?
Absolutely. If you think of what that information related to in the first place, this would be things like old legal contracts, or it would be things like term sheets, or KYC data, or annual reports, or board resolutions, companies' house registrations, all sorts of information about customers and about transactions, which was locked up in that data. Now, an example which hits this home really strongly is something that happened in late 2023, and I'm going to tell you the story, which is that around the end of summer 2023, there was actually a collapse of the roof of a school in London, and this was not very far from where we live. The roof collapsed. Luckily, nobody was hurt. But what that led to people uncovering was that more than 100 school buildings, and not just schools, this was hospitals, libraries, public offices, several hundreds of those buildings were constructed in the 1950s or 1960s using a specific type of concrete called rack concrete. And that concrete, though it was subpar and suboptimal from a robustness and strength perspective, it was lightweight, it was cheaper, and a lot of these buildings use that concrete. Now, when that roof collapse happened, and a few years before that, the risks of that had been acknowledged. But what that roof collapse in a school expedited was that 100 schools were effectively shut down in the UK out of safety concerns. Now, a large insurance company, one of the largest European insurers, also operating in the UK, obviously they had to find out which properties that they had insured had used RAC. If they wanted to do this, it would involve trawling through decades and decades worth of insurance policies to find out where in the surveyor reports there might have been one or two mentions of RAG, so that they could then investigate that, look at those buildings, figure out what remediation needed to be done. Now we're talking hospitals and schools. You can't keep them closed indefinitely. It would have taken them more than a year in their own estimates to hire the people to go through all of those documents to cover everything that they had insured. What they did instead was they used AI. And using AI, they could go through those thousands and thousands of documents covering policies issued over decades to identify 64 properties where RAC had been used, narrow that down to the 4 that were actually at risk, and immediately get remediation measures in place there within 1 week. So something that would have taken a year, they could do in 1 week, because AI now has the power to find that information and to solve for that. And therefore, to your problem of where are people looking after historical, like looking across historical data, that's an example. It's the same thing that happened in the LIBOR remediation cases that we had maybe about 8 or 10 years ago, where banks were manually going through legal contracts. They had to hire so many lawyers and paralegals at really expensive prices to be able to trawl through every term sheet and every transaction contract that referred to LIBOR, because that was now being set to a different benchmark. All of those things can be done so much more efficiently with AI, even across historical records.
Right at home. Great example. And you said the school collapse happened in 2023 or 2020?
2023.
Wow. What a way to bring it home. Because at first, when you're talking about it, I'm like, okay, where's this going? And then just circle it back to the insurance. I didn't see that coming. That's like that left hook you don't see coming. Really good.
Right? Because finance, like the trap we often fall into is all of these become like academic conversations. It's like, how great is AI? Oh, how many transactions can it improve? And like, oh, what bottom line saving can it do? But it actually affects real lives. Like it's affecting us on a day-to-day basis in your and my lives. And that's why I think it is so powerful.
Because you're right. So without that technology, it took something that would have taken a year and who knows how many people trolling through documents, and they might not even have been accurate because it's manual and so forth. And it went down to a week. Totally amazing. And then it's narrowed it down. Okay, here are, out of all the properties and policies that we went through to 64, here are the 4 that are most at risk because of this particular style of concrete that was used back in the 60s.
Exactly.
Very, very interesting. How, and can you, and I know your company, Instabase, that's one of the things you guys do in terms of unstructured data. Can you explain now, how does that process work in terms of, you have this unstructured data, you're going through it to extract the value, to get that information. Can you just give us as much detail as you can for us to understand that process?
Absolutely. So what Instabase is it's a generative AI platform for the processing of unstructured data. And what I mean by that is, think about any use case in financial services or insurance. So this can be, as we spoke about, loan origination. It can be claims processing. It can be submissions ingestion. It can be customer onboarding. It can be investment management. Wherever you have human beings who are looking through complex variable data and documents to be able to extract that data, validate that data, perhaps match it off against multiple different sources, and then turn it into data which has to go downstream. All of that can be automated using the Instabase platform. Now, the interesting thing is, historically, technology could do extraction of structured data. So if you had a nice template, if you had a nice document, you knew exactly, go 10 pixels from the top, go 30 pixels from the right, that's where you will find the account number. Pull that out from me. However, with the advent of generative AI, what we can do is, even if those templates don't exist, even if it is completely variable data every time it comes in, you can use generative AI to be able to get that information out. Now, that's where it gets interesting, because this is not just about getting that information out, but you now want to have the capability in any given use case to be able to not just automate the processing of those documents, but also analyze them. So take the example of, again, a mortgage origination process, right? You get in all of this information about the borrower, about the property, from a broker or from the borrower themselves. You then want to extract some pieces of data which are very standardized every single time. You will typically want to know what the name of the borrower is, how much money do they make, where are they currently living, how much deposit are they willing to put up, etc. All of that needs to be automated in a high volume, predictable way. So there's that automation part which AI needs to do. Then in some cases, you might have an underwriter who wants to specifically dig down into a particular set of documents or a particular type of data and saying, well, that's interesting. They've told me they're also going to get a gift from a brother who's happy to be a guarantor. Let me find out what's going on there. So you need to have the ability to have that conversation and to interrogate a particular set of documents and analyze exactly what's going on there. So that's the second piece. And the third piece is maybe you're an entire loan book that requires optimization, or I need to figure out, if I take this additional risk, what impact does that have to my overall portfolio? If I do underwrite this particular policy, how much overexposure do I have to tornado risk in Texas, for example? And for that, I want the ability to search across my entire set of data, wherever it might live in the enterprise. So AI now allows us to be able to automate those processes, analyze specific data, and then search across enterprise data to be able to take faster decisions and to be able to trigger actions based on those decisions. And that entire journey is what the Instabase platform helps customers to do using the power of Gen AI.
Thanks for that. So now, that's to understand, okay, we have unstructured data. How does that process work, right? Ingest, automate, analyze, and be able to traverse via search through all that data. What is the balance between that automation and human oversight?
That's a very interesting question. And often, I think like one of the biggest traps that organizations fall into in the whole AI territory is what I like to call the Lone Ranger syndrome. And what I mean by that is they take one of two sides, both of which are about one hero, like one agent. And what I mean by that is either they'll say, well, if I'm adopting technology, if this AI is so powerful, it should do everything for me. I want complete straight through processing. I want 100% automation. I don't even want to have a human being look at it. Now, even if you had a team of human beings, they would still not be able to be that accurate and efficient. We still have maker-checker processes in practically every financial services or insurance domain. We still require those checks because not even human beings are 100% accurate 100% of the time. And therefore, I think it is extremely important to have a human review element in all of the AI-enabled processing that you do. In fact, the higher the stakes of the decision, so for example, if you're taking a lending decision of a yes or no, or if you're deciding whether to refuse a certain insurance claim, and even outside of the fintech space, when you're taking decisions about medical diagnosis, when you're taking decisions about approval or decisions on litigation, you do require human oversight just to make sure that the AI is doing what it needs to do. The difference here comes in is rather than a human being doing the job of the maker and the checker, you have the human being coming in just as the checker, and all of the time and effort and resources that you would have spent in being the maker gets taken care of. The second argument also exists in some cases, which is the Lone Ranger becomes the human being. And some business leaders are of the opinion that, oh, but my business is so complex, it is so customized, only I know what I need to do. No technology can ever help even a little bit with this because this is so incredibly complicated and difficult. And the response to that also is absolutely like you are still going to need to do what needs to be done, but there are so many different avenues where AI could potentially make your life a little easier. So, to your point, how much human AI replacement involvement should there be? It's always both. AI can do 100 things to make human work simpler, but it still requires a human being to be the final sign off on all of that.
Look at it in a really simplistic way is these are tools, right? These are tools to get to a goal, right?
Exactly.
I can take a hammer to drive and nail in a sheetrock, or I can, you try to use my thumb to do the same job. It's going to be extremely harder and more painful using my thumb to drive the nail into the sheetrock versus a hammer, you know?
That's a
But
great analogy, yes.
you said what?
I said that's a great analogy, and you're absolutely right.
Yeah, so it's like, yeah, you can do it without it, but why would I want to, right? But at the end of the day, I'm still needed on that job site to get that nail. Like, however the nail gets in there, I'm a part of that equation. I just rather use a tool than not. And I think a lot of the conversations around AI, I don't know, maybe it's because of the mysticism around it, the movies and all this stuff. Everyone thinks, okay, it's going to take over the world. It's still a tool, right? It's like if you look at like artificial intelligence, they're trying to mimic human thinking, right? That's the idea, mimic, right? But it's still a tool, and I like what you said. So that lends into your point in terms of the human oversight, and it's still needed. But are you going to be the maker and checker, or versus just the checker, right? You're still part of the equation. Where do you see the future of it going in terms of unstructured data, Gen AI, and opportunities and risks in fintech?
Absolutely. I think a couple of things have already started happening. One is AI has started becoming a lot more mainstream than it was before. So, the conversations that we were having, say, early last year, were a lot more about experimentation and exploration and perhaps a little bit of curiosity, a little bit of nervousness. I think the question now has shifted from being whether or not to use AI to where and where not to use AI. And I think 5 years from now, that where and where not will also have shifted to how best. So it will not be, okay, these are the areas where I cannot use AI and these are the areas I can. It'll be AI has to be everywhere. It's like an intrinsic part of the entire tech stack of every single organization. The only question that people will then be debating is how do I do it best? How do I do it safely, robustly, scalably, without any bias? All of those considerations will now become stronger rather than deciding whether or not and where not. So I think that is one shift that has already started happening, which will continue to happen. The second shift is along the spectrum of human involvement. We're likely to see that human involvement change from not defining or actually, let me rephrase that. We're likely to see that human involvement changing from participation in the process to only design of the process. And what I mean by that is we just spoke about maker checker. You eliminate the maker, you still need the checker. With the advent of agentic AI, we already have AI agents who are autonomous in understanding what needs to be done and actually doing it themselves. So instead of human beings having to sit and check that process or be a part of that process, human beings will now start only designing or defining or instructing the agents, or maybe creating agents who instruct the agents. So the level of autonomy in AI is going to keep increasing. And essentially, what that will mean is we will get to a future, especially in fintech, where you could have entire companies that are being run by a few people, those who know how to deconstruct a problem into instructions for agents. And it will also give fintech companies the ability to run their businesses for each individual person. You could create a product, you could create a market for one customer because AI agents are going to do it. You don't need human beings to do it. And on the flip side, you could create a company of one. You could have one person deconstruct a problem, create a blueprint for agents to go and follow, who will then run that business the way they have been instructed to by the human being. And I think this company of one, market of one, is sort of the power that AI and agentic AI will enable fintechs to do. So I think those are the two broad trends that I expect to continue over the next few years.
That's really interesting. I'm gonna do some research and look into that. That's enlightening. I like that. Very, 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 very interesting. What practical advice can you give to companies that are currently in that journey of they have unstructured data, they're figuring out ways to leverage it? Besides obviously just pull you and subscribe to your services, but what advice can you provide in this to them?
Yeah. So the first thing, absolutely, go do it. But the second piece that I would say, and I would qualify this advice for the smaller, say, startups, fintechs, and slightly differently for the large enterprises or the big banks. So in the first space, for the smaller organizations and smaller fintechs, the advantage they have is they don't have any legacy tech. They don't have multiple systems that they've built over 20 years or integrated from 30 different acquisitions. They can effectively start from a blank slate. So my advice would be design your entire process AI natively. Make sure that AI is core to everything that you do from a process design, from a customer experience, from a product development perspective, and build it in such a way that it is a seamlessly integrated function of everything that you want to do or that your company does. Start with a specific problem that has an outcome that can be measured and that is impactful. So find where it's going to make the most difference to your customers. Find where you are currently facing the most risk or the most bottlenecks or the most operational inefficiency. Start with that one thing, map that out across your organization, apply AI there, measure the outcomes, and rinse and repeat. So that would be a slightly kind of philosophical design way of looking at what a fintech can do, and then a much more agile way of incorporating it, testing it out, and changing it. Large organizations, on the other hand, have a different problem. Like you've heard this phrase, which fintechs like to talk about in terms of building the plane as we fly. Well, a large bank cannot build the plane as they fly because if they end up chopping off a wing, they're going to bring the financial system down. So they need to think a lot more prudently about how they adopt AI. They need to have a much bigger focus on compliance and regulation and data security and all of these other things because they have a much bigger base of customers. They also have a much heavier, they have a lot of excess baggage in terms of their existing tech stack. So the AI that they adopt needs to make sure that it fits into all of their existing technology rather than considering a full rip and replace. Like we said, you can't afford to chop off a wing when you're mid-flight. So for those organizations, my suggestion would be, again, find that one use case where you think the impact is going to be the most. Find where you are spending the most amount of man hours looking across data that is creating the most amount of negative impact, either for your employees or for your customers. And great examples of this are onboarding processes, loan origination processes, claims processing, submission ingestion, like all of these things that we spoke about before are great targets for application of AI. Once you've done that, define the problem correctly. Because large enterprises, what they often end up doing is either they go too big or they go too small. If you go too big, you will have too many unnecessary dependencies. You will require 15 different systems to work in tandem right from day one to be able to see any impact of AI. If you go too small, that impact will be so small, it won't really change anything for you. So define the problem with the right scope in the right place as the first step. The second step is get your people right. And what I mean by that is in large organizations, the moment you start talking about AI, especially generative AI, this is not an IT problem anymore. It involves the business, it involves your data team, it involves your innovation team, it involves your customer team, it does involve your technology team, it might involve other vendors, other partners. All of these stakeholders need to be on the same page, and you need to assign that accountability correctly. Because then often business points fingers at IT points fingers at the business, then like nobody really is responsible for taking the project to success. So get your people equation right. And then the third piece is test it out, make sure you're again monitoring results and success, and then find a good path to scaling that out across the organization. Because if you find that it works for that one specific use case, if you find that you've set up all of that right, then find ways of sharing that best practice and getting more and more people adopting that pattern of usage and that mindset within the organization. So it's the core principles of that stay the same across small fintechs and large enterprises, but the implementation varies slightly because of the nuances of size.
Brilliant. Great advice. I love it. Listen, really enjoyed talking with you today. It's a really good show. I took some good information that I'm going to do some research on and use it for my endeavors. What we do in our show at this point is we give you the stage to talk about your company, how people can find you, and so forth. So I'm going to get off the stage and give you that opportunity.
Amazing. Thank you so much. Love being here and speaking about everything that we're doing in the world of unstructured data. And there is a lot that is happening. So if you do want to find out more, please reach out to me on LinkedIn. I'm Aditi Subbarao, or write to me on aditi@instabase.com. As we spoke before, the company I work for, Instabase, is a generative AI platform to unlock the power of unstructured data across your organizations. We give our customers the ability to be able to automate business processes predicated on unstructured data, to analyze complex data and derive insights from it, and to be able to search across all data in your enterprise, whether it's unstructured, semi-structured, or structured, and irrespective of where it lives, to be able to get a much better understanding of your customers and your business. You can find out more by looking up www.instabase.com. And you can also try out an offering of the product by going to search for AI Hub on instabase.com. So upload your own data, upload your own documents, ask it a few questions, and see what you think. Some of the world's largest financial services, insurance, federal, CPG organizations use Instabase to make their processes much faster and more efficient, and to gain better customer experience and operational efficiencies. So check it out and find out more. I'm always happy to speak. Look forward to hearing from you.
Thanks, Aditi. For our audience, I put the website below. Just you'll be part of this video right now, so you guys can go to instabase.com. Wow, wonderful show. Listen, we are here every Friday, 12 p.m. Eastern Standard Time, the Tech Behind FinTech. We just launched our new newsletter. You could go to techbehindfintech.com/subscribe. I'll put it on the screen in a second so you guys can go there and see it. You definitely want to be part of our newsletter. We give insightful information every week, and it's free. So why not just give us your email, and then you'll get the weekly insights on the techbehindfintech.com. We'll send you this newsletter with all the latest fintech news, our interviews from our experts, and so forth. Once again, and you'll get updates on the next show, the guests we're having, and so forth. So you could visit the techbehindfintech.com/subscribe to become part of that weekly newsletter. For now, in the future, it may increase, it may send it out more frequently. With all that said and done, thank you very much for joining. I wish everyone a great weekend. Aditi, my guest, totally brilliant. Thank you very much for joining. You're now a friend of the show. If something in the news comes up about unstructured data, I'll call you and we'll talk about it and try to break it down and get a better understanding of it. So definitely appreciate the relationship we established and meeting you at Money 2020. This is our second conversation. The first was short. Now this one's the longer one. Definitely a lot of insights in this meeting. So I thank you for that. To everyone else, as I always say, whether you watch the show today live, whether you're going to watch it tomorrow or you watch it next year, I thank you for your viewership. I thank you for the messages. I thank you for the kind words that you sent. Really appreciate all of you. We've been at this journey for a while now. We want to continue doing it. So with that said and done, I wish all a happy weekend and have fun this weekend. Take care of yourselves. Cheers.
Bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.